Hello everyone. So now the turn for 6th semester mid sem exams MCQs. Similar kind of thing we had done in 5th semester also. So you all can see this table in front of you wherein all the various different type of MCQs are covered. You can see 21 different types of MCQs are possible here in practical questions. I am concentrating over here in this lecture only on the examination questions MCQ. Other than that, in your study material, extra MCQs for chapter wise practice are also given. So if you practice this examinations questions first, you'll be able to do those questions very easily on your own. So one question of each type, total 21 questions I'm going to cover in this lecture, and the similar ones you have to try on your own. You already are aware about this in the last set. So if I solve question 1 of February 2020 exams, then you have to try question 27 of February 2017, 26 of March 2018 and 20 of March 2019 on your own. They are exactly similar. Let's kickstart with the things. So look at question 1. This is of February 2020 exams. Look at it, be attentive. VLCC Limited has rupees 3,50,000 net income for the quarter ended 31/12/09. Let us simultaneously keep solving it also. Quarter ended 31/12/2009. That means December will be the third quarter. Okay, so if you all remember, we used to make this workings quarter 1, quarter 2, quarter 3 and quarter 4. Now here the quarter in consideration is third quarter, which includes 30,000 provision for bad and doubtful debts. Now this includes means first we have to write what should be done. If you all remember, we have been doing this workings. What is actually done? Actually what is done is 30,000 quarter 3 includes. Okay, quarter 3 includes 30,000 of provision for doubtful debts. Out of this, 20,000 provision relates to second quarter due to wrong estimate in the second quarter. So due to wrong estimate in the second quarter, we have taken 30,000 in the third quarter, but from this 20,000 belongs to second quarter, means what should have been done? 20,000 should have been taken in second quarter and 10,000 in third quarter. Okay, 20,000 relates to second quarter, so 20,000 should have been taken in second quarter and 10,000 in third quarter. Now, you are asked what is the profit for the quarter ended 31/12/2019 as per accounting standard 25. So in accounting standard 25, what we will have to do in quarter 3 as per accounting standard 25? We should have taken 10,000 of BDR. We have actually taken 30,000 of BDR, means more BDR is taken. So 20,000 of BDR, if you remove from P&L account, the profits will increase. 20,000 of BDR, if you remove from P&L account, the profits will increase. So what will be the profits? 3,50,000 plus 20,000, 3,70,000. 3,50,000 plus 20,000. What will be the profits for this quarter? 3,70,000. Option A. So now you can try these three questions on your own. 27th question of February 2017, 26th of March 2018 and 20 of March 2019. Now I take up with question number 5 of February 2020. Be attentive. C Limited has carried forward loss of rupees 8 lakhs for income tax purpose, for which deferred tax asset has not been recognized. Okay, this we have done in practical questions in interim reporting. It also earns rupees 10 lakhs profit in each quarter, ending 30 June, September, December and March. All the 4 quarters, 10 lakhs each. Excluding the loss carried forward, income tax rate is expected to be 25%. What is effective tax rate for the year 18 to 19? Now understand this. Very first of all, what will be the total profit for the whole year? 10 lakhs into 4. That is 40 lakhs. Now from 40 lakhs we'll adjust carried forward loss. That is 8 lakhs. So you have to pay tax. Okay, you'll adjust this loss in the current year. So you will pay tax on only 32 lakhs. You can say taxable profits. Okay, taxable profits are 32 lakhs. Now tax is 25%. So what will be the tax expense? 32 lakhs into 25%. 32 lakhs into 25%. 1/4, that is 8 lakhs. Now 8 lakhs, we have to count how much percentage it comes on 40 lakhs. That is called effective tax rate. Okay. So effective tax rate will be equal to 8 lakhs divided by, we have to pay this amount on 40 lakhs of current year profits. So 8 lakhs divided by 40 lakhs into 100, that is 20%. So though the tax rate is 25%, but because of adjusting the carried forward loss, effective tax rate will come to 20%. Option C is the answer. So similarly, now you can try February 2017's question 11, March 2018's question 17, and March 2019's question 30 on your own. Other than this table, whatever questions are covered in the study material, they all are theoretical and answers are already given. So for them, no discussion is required. You can directly try them on your own. Now look at question 7, that is February 2020's question 7. Okay, third type of question. If revenue of business segments P, Q, R, S, T, U, V is 3,50,000, 1,50,000, 1 lakh, 5 lakh, 2 lakhs, 3 lakhs, and 1,50,000 respectively. This is P, Q, R, S, T, U, and V. Okay. Based on the criteria in terms of sales revenue, which segments will not be the reportable segment? That is what we have to answer. Okay. The condition is whichever segments have at least 10% of segment revenue should be reported. So here will not make that workings counting each and every segment's percentage. Simple thing is you just count total of all the segments revenue, 3,50,000 plus 1,50,000 plus 1 lakh plus 5 lakhs plus 2 lakhs plus 3 lakhs plus 1,50,000. So that comes to 17,50,000. Total segments revenue come to 17,50,000. What is 10% of that? This is a shortcut I am explaining you, and I have explained this in the chapter of segment reporting also. 17,50,000's 10% comes to 1,75,000. Now whichever segments have more than or equal to 1,75,000 of revenue will be reportable segments. Whichever don't have will be not reportable segments. So which are the reportable? 3,50,000 are reportable. 1,50,000 is not reportable because it's less than 1,75,000. 1 lakh is not reportable. Again, 5 lakh is more than 1,75,000 is reportable. 2 lakh is more than 1,75,000 is reportable. 3 lakh is more than 1,75,000 is reportable. 1,50,000 is less than 175 is not reportable. So which ones are not reportable? Q, R, and V. These three are not reportable. We have to answer which are not reportable segments. So Q, R, and V means option B. Read the question very carefully in exams. Is it asked not reportable segments or reportable segments? Which one is asked? You read it very carefully. Okay. Now look at question number 9. Be attentive. Calculate periodic cost of defined benefit for the year 2019 if the current service cost is 5,960, interest cost is 1,085, return on plan assets is 1,350, actuarial gain is 2,000, and share of current year's past service cost amortized is 300. Now formula you have to remember, I discussed this in employees benefit cost. That how do you find the cost, periodic cost of defined benefit? Current service cost, this will be the starting point, plus interest cost minus return on plan assets. Return on plan assets we subtract, and actuarial gain we minus and loss we plus. So here it's gain, so we will minus, and past service cost amortized will also get added. So simply you have to directly do it in calculator. With 5,960 plus interest cost 1,085 minus return on plan assets 1,350 minus actuarial gain 2,000 and plus past service cost amortized 300, so 3,995. Option A is the correct answer. So here no solution is required. Directly you can do it on calculator itself. Now look at question number 10. Be attentive. Look at question 10. OBC Limited had 3 lakhs equity shares outstanding on 1/4/18. Opening balance of shares. Okay. Then net profit for the year 2018 to 19 is 50 lakhs. Net profit for the current year. Then company had 9% 50,000 convertible debentures. Okay, convertible debentures of rupees 100 each to be converted into 3 equity shares of 10 each. Tax rate is 25%. Then calculate the diluted EPS. So for diluted EPS, we require revised or adjusted profits available for equity shareholders divided by adjusted weights. First of all, adjusted profits. Here we are making rough calculations only, so proper formats etc. is not required. Okay. Current net profits are 50 lakhs. Okay. Current net profits are 50 lakhs. In that we will add interest on debentures as well as we'll add interest on debentures and we'll minus the tax rate. Okay. 50 lakhs plus interest on debentures would be equal to 50,000 debentures into 100, 50 lakhs into 9%. Okay, 50,000 debentures into 100 into 9%. So 50 lakhs into 9% is 4,50,000 that we will plus, and 4,50,000 tax we will minus. 4,50,000 into 25%. Okay, 4,50,000 25% tax we will minus. 1,12,500. So adjusted profits will come to 53,37,500. 53,37,500. And same way adjusted weights, existing equity shares are 3 lakhs plus 50,000 debentures will get converted into 3 means 1,50,000 potential equity shares. Potential equity shares, 50,000 debentures into 3 equity shares. So that would be 1,50,000 means adjusted weights will be 4,50,000. Okay, these are adjusted weights and these are adjusted profits. So now we apply the formula. Diluted EPS is equal to adjusted profits 53,37,500 divided by adjusted weights 4,50,000. Since MCQ point of view it is done, so we are not writing the things in detail. That comes to 11.86 rupees. 11.86 is the diluted EPS. Check your answers, everyone. Okay, 11.86 is available, so B should be the option. All of you mark it as option B. Okay, 11.86. Make the correction. It's not none of A, B, and C. It's B option 11.86. Next question 11. D Limited has 4,80,000 net income. D Limited has 4,80,000 net income for the quarter ended 30th September 2019 means second quarter. Okay. After considering 80,000 of extraordinary gains occurred on 10th May 2019. 10th May 2019 means first quarter, which was allocated equally to each quarter for the financial year 19 to 20. What is the profit for the quarter ended 30/9/2019 means second quarter as per the accounting standard. So you'll write that workings quarter 1, 2, 3 and 4. Now what should have been done? 80,000 of extraordinary gain. Extraordinary gain has occurred in quarter 1. So 80,000 should be taken in quarter 1. But what have we actually done? What we have actually done is we have allocated it equally to each of the quarters. Means 20,000, 20,000, 20,000, 20,000 we have taken in all the 4 quarters. Now what should be done here is basically in quarter 1, 80,000 should have been taken, 20,000 is only taken, so 60,000. It's a gain, means if we take further profit will get increased. And here if you remove the gains, in all the other quarters the profit will decrease. Now we have to find the answer for which particular quarter exactly over here, quarter 2. We have to find the answer for quarter 2. Okay, so quarter 2, if you see into consideration, we are supposed to subtract 20,000 from the profits. Means 4,80,000 minus 20,000, your answer will become 4,60,000. So 4,60,000, option C is the correct profits. Okay, so see that you all keep on trying the questions on your own. Like just now we did 9th question, so there is no similar question for post periodic cost of defined benefit. But question 10, what we did right now, you can try March 2018's question 10 and March 2019's question 6 as well as question 14, which is based on convertible debentures. And again we did quarterly profits, extraordinary gain, you don't have similar question for that. Now 7th type of question, look at 13th question. ABC Limited had 5 lakh outstanding equity shares of 10 each on 1/4/18. Net profit for the year ended is rupees 10 lakhs. It had 11% 2 lakhs convertible preference shares of rupees 10 each converted into 1 equity share of 10 each. Calculate diluted EPS and ignore DDT. Similar question, but previous was with debenture and this is with preference shares. So again here if you take first find the adjusted profits, then net profits given to you currently are current net profits or profits attributable to equity shareholder are 10 lakhs. Now in that profits of 10 lakhs, first we will add the preference dividend and we also add DDT, but DDT is to be ignored. So only preference dividend, 2 lakhs into 10, 20 lakhs into 11%, 2,20,000. Okay, 2 lakh preference shares into rupees 10 into 11%. So that comes to 2,20,000, means adjusted profits will be 12,20,000. And against that number of shares, existing are already 5 lakhs. Existing shares are already 5 lakhs. In that if we add 2 lakh into 1, potential equity shares will be again 2 lakh only. Okay, because each preference share, that is 2 lakh shares, are converted into 1 equity share only. So that will be 2 lakhs. 5 lakhs plus 2 lakhs, adjusted gains will be 7 lakhs. Now if you apply the formula, adjusted profits 12,20,000 divided by adjusted gains 7 lakhs. Then what answer will you get? 12,20,000 divided by 7 lakhs. 1.742, so rupees 1.74. So option D is your answer. Okay, then similar to that you have question number 13 of March 2018 exams that you can try on your own. Now look at question 15 of February 2020. S Limited has 2,50,000 of net income for the quarter ended 30 September 2019. 2,50,000 net income for quarter ended 30th September means second quarter, which included 40,000 of cumulative excess depreciation due to change in method from SLM to WDV. Only 10,000 of excess depreciation relates to this quarter. What should be the income for the quarter ended 30th September 2019? First of all, again all of you write quarter 1, 2, 3 and 4. Now, 40,000 of cumulative excess depreciation due to change in method and 10,000 only relates to this quarter, means what should have been done regarding this depreciation in quarter 2, only 10,000 relates, so we should have taken 10,000 of depreciation only. But what we have actually done in quarter 2 is we have taken 40,000 of depreciation. Excess 30,000 of depreciation we have taken. If you remove that, the profits will increase. If you remove that excess depreciation, the profits will increase. So presently 2,50,000, in that you add 30,000, you'll get 2,80,000. So correct profits for this quarter will be 2,80,000. That is option B. Question 21. So similar to this, you have questions like 15th, what we did right now, February 2017's question 12, and March 2018's question 25. Okay, these two you can try on your own. Now look at question number 21. ABC Limited had 1800 equity shares outstanding as on 1/1/19. So opening balance is 1800, fully paid rupees 10. On 31st October 2019, it issued 600 equity shares of 10 each, but 5 paid up. So we have discussed when there are partly paid shares, we will take how many shares? 600 shares into 5 paid up means their value will be 3000. If they are fully paid up as if 10 rupees divided by face value 10, then we will take them equal to 300 shares only. Those 600 equity shares are there, but when we solve ways, we will take them equal to 300 shares fully paid up because these are partly paid up. So 600 into 5, 3000 rupees paid up. If they were fully paid up 10 rupees, then they would have been equal to 300 shares. Calculate means. Now I'm not making the whole table, but in rough, just in rough. So in exams also you can do it that way only. 1/1/19, there are 1800 equity shares. So balance will also be 1800. Then plus on 31st October 2019, they have issued, so we will add, and will not add 600, we will add this 300 shares. So 1800 plus 300 will become 2100. Now weights, what we have to apply, we have to calculate for the year ending 31st December 2019. Okay, be careful with this. So 1/1 to 31st October will be full 10 months. This will be multiplied with 10 months of weight, and then November, December 2 months. After that, November and December 2 months are remaining. So 2100 will be multiplied of 2 months of weight. So 1800 into 10, 18,000. 2100 into 2, 4,200. 18,000 plus 4,200, 22,200. Total veins will be equal to 22,200. Okay. Okay, we have to divide by 12 also. Just a minute. Yeah, 1800 into 10 divided by 12 and 2 divided by 12. Do it everyone in calculator. 1800 into 10 divided by 12, that is 1500, and 2100 into 2 divided by 12, that is 350. So 1500 plus 350, you'll get 1850. Alternatively, even if total answer you would have divided by 12, you would get the same answer. So 1850 is your final answer. Now, similar to this, you have questions, so you can try February, this veins, I have done the question over here, 21. February 2016, you can try question 9. March 2018, you can try question 24. March 2019, you can try question 12. Now look at 22nd question. From the following data regarding revenue of 3 segments of Honest Limited, calculate enterprise revenue. Now see, when we count enterprise revenue, if you remember the segment report which we used to make, we used to count the total revenue and eliminate the inter-segment revenue. Inter-segment sales we used to eliminate. So just ignore this. Rest of all is enterprise revenue because that you earn from outside people. Just ignore this and do the total of all these. Just do the total of all these, because rest inter-segment sales is not earned from outside customers. So just do the total of all these. 3 lakhs plus 1,20,000 plus 4,10,000 plus 1,50,000 plus 2,80,000 plus 60,000. That is 13,20,000 is your answer, because these are all which sales? External, and only external are to be included in enterprise revenue. Internal are not to be included. I hope everyone is clear with that. Now look at question number 23. Okay, so similar to this question number 10, what we did right now, there is one more question asked in exams March 2019, question 18. You all try that on your own. Okay. Now question 23, 11th variety of question, look at it. A company's profit after tax for the year ended 31st March 2019 was rupees 1,50,000. Okay. And company's profit after tax for the year ended, Okay, this is for 31st March 2019 and 31st March 2018 was 1,35,000. Companies issued share capital at 31st March 2018 consisted of 2,40,000 equity shares. Means at the end of last year it was 2,40,000, and a 1-for-4 bonus means 1:4. 1-for-4 bonus means 1:4 was made on 1st October 2018, means in this year. There were no other issue of shares in this year. So 1-for-4 means if there are 2,40,000 equity shares, bonus shares would be equal to 2,40,000 into 1/4. That is 60,000 shares. Now they say basic EPS for 2019 and restated EPS for 2018 are. So actually, if you all remember, we used to do this 2018, 2019, 2 columns. Okay. Now, very first of all, net profit for both the years are 1,50,000 and 1,35,000. Here 1,35,000 for 2018 and 1,50,000 for 2019. And number of shares actually are, these are the profits. And number of shares actually are 2,40,000, and here 2,40,000 plus 60,000, 3 lakhs. So if you all remember, we used to find first basic EPS for both the years and then restated EPS for both the years. So when you find basic EPS for both the years, then that could be equal to 1,35,000 divided by 2,40,000 and 1,50,000 divided by 3 lakhs. So 1,35,000 divided by 2,40,000 comes as 0.5625, and 1,50,000 divided by 3 lakhs is 0.5. But then we used to write restated EPS or reported EPS. Restated or reported EPS means both the years you'll divide by 3 lakhs only. Okay, so that the correct impression goes amongst the shareholders. Bonus shares will be included from the earliest period reported. So what will be restated or reported EPS for both the years will be, this year will become 1,35,000 divided by 3 lakhs, 0.45, and this 0.5 is already including the bonus shares. So when you report to the shareholders, you will not report 0.56 and 0.5, you will report 0.45 and 0.5. Let us see this one. Option B, 0.45 and 0.5. Now look at question 25. Okay, similar to this, you have questions. March 2018's question 3 and March 2019's question 21. All of you try them on your own. Now look at question 25, 12th variety based on segment results condition. Which are the reportable segments based on segment results condition? I just told you do the total, and whichever are 10% or more will be the reportable segments. So first do the total. 3 lakhs plus 4 lakhs plus 50,000 plus 40,000 plus 22,000, that is 8,12,000. Now what is 10% of that? 81,200. So whichever segments have results or profit of more than 81,200 are reportable, less are not reportable. Which ones are having more than 81,200? 3 lakhs, 4 lakhs, these two are reportable. And which ones are not reportable? 81,200 and less are 50,000, 40,000 and 22,000. What we are asked, the question is, which are the reportable segments? Green ones are the reportable segments. So our answer is L and M. There should be correction. N should not be included. Remove N from here. Only LM are reportable. NOP are not reportable because their results are less than 81,200. Okay. Maybe there is some misprinting or else, but you, as per the current situation, L and M are reportable. You all can try these questions on your own. February 2017's question 19, March 2018's question 8, March 2019's question 8. These three questions you all can try on your own. Now actuarial gain or loss question 26. Be attentive. Next variety. Expected return on plan assets is 30,50,100 and actual return on plan assets is 31,50,600. Therefore, difference is recognized as now actual return is 31,50,600. From that you minus expected return. This is what we have been doing when we solve the questions. 30,50,100. Okay, from actual return you minus expected return. If actual returns are more, it is actuarial gain. So 31,50,600 minus 30,50,100. That comes to positive 1,05,000. That is actuarial gain. If it comes negative, it is actuarial loss. Here it is actuarial gain. Option C. Similar to this, you all try question numbers. February 2017's question 9, March 2018's question 20, March 2019's question 3. Now look at 27th question of same exam, 14th variety. The fair value of plan assets at the beginning. Now beginning we used to minus, and at the end was our starting point. So 2,05,000 is the beginning fair value, will minus 2,85,000 is the fair value at the end, will be our starting point. The employer's contribution to the plan during the year was 75,000. That again we will minus. And benefits payment to retirees were 50,000, we will plus. So directly you can do this answer in calculator. Starting point 2,85,000. Okay, minus 2,05,000 fair value in the beginning, minus 75,000 employers contribution, plus 50,000 benefit payment. So 55,000 is your correct answer. Similar to this question, 14th variety, you can try February 2017's question 29, March 2018's question 23, March 2019's question 5. Now 15th variety of question, look at March 2019's question 9. I repeat, March 2019's question 19, look at it, be attentive. This one. Which are the reportable segments based on segment assets given as under? So same condition, segment assets first will do the total. 20 plus 40 is 60. 60 plus 15, 75. 85, 95, 100. So quite simple, 100's 10% will be 10 only. Whichever are more than 10 are reportable and less than 10 are not reportable. More than 10, 20, 40, 15, 10, 10. Equal to 10 are also reportable. And only X is not reportable. So here questions asked is which are the reportable segments. So which are the reportable segments means we'll say green ones. So which are the green ones? STUVW. Option B. STUVW are reportable. Now similar to this question 15. There is no other question asked on assets condition. Now 16th variety of question, look at 23rd question of March 2019 based on extraordinary loss, quarterly profits and extraordinary loss. F Limited has net income of 2,65,000 for the quarter ended 30th September 2017 means second quarter. After considering 60,000 extraordinary loss incurred on 20th April means quarter 1, which was allocated equally to each quarters for the financial year 17 to 18. Ascertain the profit for second quarter. First you all write quarter 1, 2, 3 and 4. Now what should have been done? 60,000 of extraordinary loss was incurred in April. So extraordinary loss, what should have been done? April means first quarter. So entire 60,000 should have been taken in first quarter. But we have allocated equally in all the quarters. So what is actually done? 60,000 divided by 4. 15,000 we have taken in quarter 1, quarter 2, quarter 3 and quarter 4. Now we are asked the answer for second quarter. So in second quarter what we are supposed to do? First of all, in quarter 1 we should have taken 60, we have taken only 15. So further, if you take 45,000 of loss, the profits will decrease. And in all other quarters, if you remove the loss, the profits will increase. All other quarters, if you remove the loss, the profits will increase. We are asked particularly for quarter 2. Okay, September means quarter 2. So what we are supposed to do, we are supposed to plus 15,000 in this 2,65,000. So 2,65,000 plus 15,000, the reported profits will be 2,80,000. Option B is the correct answer. Similar to this extraordinary loss, you all have questions. So you all can try February 2017's question 30 and March 2018's question 14 on your own. Now 17th variety of question, look at 25th question of March 2019. %70 of sales promotion expense rupees 10 lakhs incurred in third quarter has been deferred to the fourth quarter as sales in the last quarter is high. Give the treatment for third quarter. Now, see if you see only quarter 3 and 4 over here, then out of 100, what should have been done is, because all 10 lakhs should have been taken in quarter 3, because all sales promotion expense are incurred in third quarter. But what is actually done, 70% is deferred to quarter 4, means 10 lakhs, 70%, 7 lakhs we have taken in quarter 4 and only 3 lakhs we have taken in quarter 3. So here if you take further 7 lakhs of expense, the profits will decrease. Here if you remove 7 lakhs of expense, the profits will increase. Now look at the answer. Option D is the correct one. We have to minus 7 lakhs from the profit as sales promotion expense not recognized in the quarter, because they are talking about which quarter? Quarter 3. So in quarter 3, what you are supposed to do? Minus 7 lakhs. Okay, so less 7 lakhs. Similar to this question 25, there is no other question. Now directly 18th variety of question is in February 2017 exams. So look at February 2017 exams question 23 based on weights. February 2017 exams question 23 based on weights. It's a simple question based on weights including bought back, so I'm taking it separately. Retail limited at 7,200 equity shares outstanding on 1/116 opening balance. So write down 1/116 opening balance 7,200. So balance will also be 7,200. Then on 31st May 2016 it issued, so we will plus 2,400 equity shares for cash. So 31st May 2016 we will plus 2,400, means 7,200 plus 2,400, 9,600. Then it bought back on 1/11/16, it bought back 1,200 equity shares. We will minus 1/11/16, we will minus 1,200 bought back equity shares. So 9,600 minus 1,200, 8,400. Now we are asked weights. So what we'll be doing is, understand it. January to end of May, 5 months, 5 by 12. Then June to October, or 1st November, so November is not included. So June, July, August, September, October, 5 months. Okay, and again the year ending is December. So after that, November and December, these are 5 months, these are 5 months, and November and December is 2 months. So 2 by 12. Counted everyone. 7,200 into 5 by 12, 3,000. 9,600 into 5 by 12, 4,000. 8,400 into 2 by 12, 1,400. 3,000 plus 4,000, 7,000 plus 1,400, 8,400. So 8,400 is our answer. I hope everyone is clear with this. Okay, 8,400 is the correct answer. Now, similar to this, there are other varieties of questions. March 2014's question 2 and March 2015's question 9. All of you try these two questions on your own. Now, very few are remaining. Look at 19th variety of question. Question 25 of February 2017 exams. Question 25 of February 2017 exams. Sara Limited had the following number of equity shares outstanding as on 31st March 2016. 40 lakh equity shares of 10 each fully paid up and 20 lakh equity shares of 10 each 5 paid up. So we will take 20 lakhs, just now we did that, into 5 paid up means 1 crore is the paid up value. If they are fully paid 10 rupees, they will be equal to 1 crore divided by 10, 10 lakh shares. So when we count the veins, we'll consider only 10 lakh shares. The company's profit after tax for the year ended is 28 crore, calculate basic EPS. So when we count basic EPS, you'll take the profits attributable 28 crores divided by 20, you take 40 lakh shares plus 10 lakh shares, okay? 40 lakh plus 10 lakh. Don't take 20 lakhs but 10 lakh as fully paid up. So 28 crores divided by 50 lakhs. 50 lakhs means, can I say 0.5 crores? If you take numerator and denominator both in crores. So 28 crores divided by 0.5 crores, that is 56 rupees is the earning per share. Okay, 50 lakhs means 0.5 crores. I hope everyone is clear with that. This is in lakhs, this is in crores. So 56, option C is your answer. Now here, similar to this 25th, there is no other question. Same exams, question 26, basic EPS including bonus shares. So look at that question, 20th variety. H Limited had 2 lakh equity shares outstanding on 1/1/16. On 1/10/16, it issued 2 equity shares as a bonus for each share held. Means 2:1 is the ratio of bonus. So 2 lakhs into 2 by 1. 4 lakh bonus shares would have been issued. Then net profit is 6 lakhs, calculate basic EPS. First of all, veins will become, I told you that bonus will be included from the earliest period reported. So veins will become 2 lakhs plus 4 lakhs, 6 lakhs. Veins will simply become 2 lakhs. 4 lakhs will include it from the beginning of the year. So entire 6 lakhs will include from the beginning of the year into 12 by 12. No need to make the table. And net profits are also 6 lakhs. So basic EPS will be profits attributable to equity shareholders 6 lakhs divided by veins including bonus shares is 6 lakhs. So rupees 1. So option A is the correct answer. Similar to this question number 26 also, there is no other question. And last is February 2016. Okay, February 2016's question 3, which is on tax expense with different tax rate. Last question. Okay, 21st. Okay, February 2016's exams question number 3. Look at February 2016's question 3. A Limited reports quarterly estimates of annual income of rupees 10 lakhs. Assuming tax rate on first rupees 5 lakhs at 30% on balance income at 40%, the estimated quarterly incomes are 75,000, 2,50,000, 3,75,000 and 3 lakhs. Calculate the tax expense to be recognized in third quarter. Now, first of all, we'll have to find the average effective tax rate. Okay, assuming the tax rate on first 5 lakhs is 30%. So total income is 75 plus 250. Count the total of these amounts. 75,000 plus 2,50,000 plus 3,75,000 plus 3 lakhs, 10 lakhs. Total income is 10 lakhs. Okay. So from total income of 10 lakhs, first 5 lakhs. Okay, first 5 lakhs, the tax rate is 30%. So that will be 1,50,000. The remaining 5 lakhs, the tax rate is 40%, so that will be 2 lakhs. So total tax expense is 3,50,000. Now what is the effective tax rate? Effective tax rate comes to 3,50,000 divided by 10 lakhs is the total income multiplied by 100. 35% is the effective tax rate. So every quarter we will report tax expense of 35%. We are asked for which quarter? Third quarter. Third quarter the profits are 3,75,000. So we will report tax expense of 35%. 3,75,000. We are talking about quarter 3. 35% means what tax rate? Effective tax rate 35%. So what tax expense we will report? 3,75,000 into 35%, 131,250. So option C is the correct answer. And again, similar to this, there is no other question. So all of you see that you try these remaining questions on your own. You can take the screenshot of this, and otherwise also I'll be uploading the soft copy of the solutions also, so you can have easy access to that from You Will Learn app also. And then you try the all remaining questions on your own. So that will be all for this lecture. Wish you all the best for your MCQ exams, and we meet after your next SEM exams and mid-SEM exams. Bye everyone. Take care. See you in the next lecture.